Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be having a conversation about Canada, and we'll be looking at key focus on the top news that are moving the Canadian markets, with key focus on the Canadian dollar. So we'll be talking about today's main event, which will be the Canadian inflation report. We'll also be looking at a highlight on tariffs, the new Canadian Prime Minister, as well as oil and the oil business between Canada and its major partners. Try and understand the outlook for the Canadian dollar going ahead. So we'll also be looking at other market news that are currently moving prices. And once we do that, hopefully everyone will trade from an informed perspective. So as always, this session is not an investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So that being said, shout out to Margaret Parra for being the first person to join and comment. Good morning. Morning, Maureen. I can see Rono, Ibsan, Matilda, Dickens all in the house. Thank you guys for joining. Let's do this. So can you give me a sec? All right. So let's begin with the economic calendar and try to understand what are the prevailing or the top market news today. So, of course, the main event of the day will be happening at 3:30 p.m. We'll be looking at the Canadian inflation report. So, inflation year over year, as per the previous reading that is in January, it was at 1.9%. And now we have a consensus estimate that this inflation may have increased by 2.1% in the month of February. So core inflation was at 2.1%. We're expecting this to have slightly increased to 2.2%. Whereas month over month, we had a 0.1% increase in January. Now we're expecting a big jump of 0.6% increase. So core inflation month over month was 0.4%. We're expecting a slight increase of 0.2%, whereas CPI median year over year 2.7%, and we're expecting the same. Whereas the main focus or data point that the Bank of Canada uses in making policy decisions, that is a trimmed mean CPI year over year. In this case, the previous reading was 2.7%, and we're expecting a slight uptick to 2.8%. So overall, across board, we're expecting an increase in CPI inflation in Canada. And what this means is that the average prices that the average household in Canada is paying for their consumer goods might have increased by a big margin in the month of February. And if this turns out to be true, then it could reverse the monetary policy stance by the Bank of Canada, from a stance where the Bank of Canada has been cutting rates to another direction where it might consider holding rates steady at the current level or even consider a rate hike. So in that case, an increase in inflation should be construed as positive for the Canadian dollar. Whereas if we continue seeing inflation easing in the Canadian economy, then that would mean that monetary policy remains easy, and as a result, we could be seeing a much weaker Canadian dollar. However, that's not the only thing that is currently impacting the Canadian dollar. There is more to the story. So we'll be starting with one article here, and this is about tariffs. So if there is one economy that has been hit by US tariffs or President Trump's tariffs, then that would be Canada, closely followed by Mexico, and then China, and the list continues. So US President Donald Trump said he would be imposing both broad reciprocal tariffs and additional sector-specific tariffs on the 2nd of April, and that's not very far off. Today is the 18th of March. So Trump told reporters aboard Air Force One that in certain cases, both types of levies would be placed on foreign goods imported to the US. They charge us and we charge them, and then in addition to that, on autos, on steel, on aluminium, we are going to have additional tariffs. So the remarks signal that Trump plans to press ahead with a more aggressive tariff regime, despite initial moves roiling financial markets and straining alliances. Trump had previously said that his administration is preparing what he has dubbed reciprocal tariffs, which would hit imports from each country with a tariff rate determined based on calculation incorporating its own tariff and non-tariff barriers. So far, Trump has already imposed a 25% tariff rate in China, as well as 25% levy on steel and aluminium. He has also announced a 25% tariff on Canadian and Mexican goods, but subsequently offered a 1-month extension of goods compliant with the North American trade deal, known as USMCA, negotiated during his first term. Trump has also said Canada Energy and potash, a key fertilizer, would only be hit with a 10% tax. So we all know that Canada's main trading partner is the US. So whatever Canada produces, they majorly export it to the US. So one of Canada's top exports is oil, and Canada has been improving its oil production in the last 2 years. So as a result, we are looking at a situation where Canada produces a lot of oil, but then when they export this oil to the US, they have to pay a 10% tax. So what this means is that either the producers will not be selling to the US, which is highly unlikely, or they will absorb 10% in order to remain competitive with the WTI or West Texas Intermediate counterparts. So this takes a big hit on Canada's oil, and there's several other industries that have been impacted by tariffs. So when we look at the 25% levy on steel and aluminium, and we are expecting this to be implemented on the 2nd of April, then in this case, the biggest exporter of steel and aluminium to the US, you can guess it's still Canada. So being hit by 25% levy means that these companies might have to adjust their business. They might not be very competitive in the US because they are paying additional 25% taxes. So as a result, they may be exploring other markets, but nevertheless, this is a huge business disruption. And as a result, we could be seeing the Canadian stock market being impacted. And in this case, I mean companies dealing with steel, companies dealing with aluminium, and now companies dealing with oil. So as a result, that is hitting the Canadian economy hard, as well as the Canadian currency. So in another article, Canada is limited in matching further US tariffs, Carney says. So in the most recent update, we know that Canada basically changed their prime minister last week. So now they have a new prime minister called Mark Carney, and the new prime minister is not facing Trump head on. He's taking a much softer stance, trying to negotiate his way through, because he knows that the US economy is much bigger, 10 times bigger than the Canadian economy, and they cannot match the tariffs head to head. So Canada can only go so far in responding to new import taxes imposed by US President Donald Trump, given the mismatch in size between the economies, Prime Minister McCartney said. So there's a limit to matching these tariffs, dollar for dollar, given the fact that our economy is a tenth the size of the United States. He said Canada's response will depend on what Trump decides to do on the 2nd of April. The US president has repeatedly promised to roll out reciprocal tariffs, by that date on countries that have existing tariffs on US goods. He has also threatened additional levies on sectors such as autos, pharmaceuticals, and semiconductors. So when Trump first threatened across the board 25% tariffs on Canada, the then Prime Minister Justin Trudeau outlined potential retaliation of 155 billion Canadian dollars worth of US goods. Trudeau's government went on to target about 60 billion dollars in US imports in response to Trump's actions. Carney, who replaced Trudeau as Prime Minister on Friday, suggested it will be difficult for Canada to go beyond the remaining 95 billion dollar on the list. He said those items were chosen because they have maximum impact on the United States and limited but not zero impact in Canada. So we are going to take an action that we think is not ultimately going to influence the United States, and certainly not one that is outright harmful to Canada, Carney said. So Carney spoke to reporters during his first foreign trip since taking office. Earlier in the day, he met with French President Macron in Paris and UK Prime Minister Keir Starmer in London. So unlike Canada, the UK chose not to respond when Trump imposed tariffs on steel and aluminium imports last week. Carney said he did not push for such action during his meeting with Starmer. We take our own decisions with respect to our bilateral trade relationships with the United States, Carney said. We are not trying to organize coordinated retaliation. Other countries will take those decisions. He stressed that Canada is aiming for with Trump is a more comprehensive discussion of and negotiation of our overall commercial and security relationship. When the United States is ready to have that conversation, we are ready to sit down. So far, Canada is at the rear end of Trump's tariffs, and the current Prime Minister has changed the policy stance. So he's not threatening broad fight back against Trump. Instead, he's looking for a more diplomatic solution to the current issue facing Canada. And as a result, we have seen some glimpses of hope. So there's more to the story. So I'm going to see what else I missed. Give me a sec. So on the other hand, the visit by Canadian's Prime Minister to France as well as the UK was seen as a visit to seek reliable allies amid the US disputes. So Canada's new Prime Minister Carney has met with French President Macron and on his first official overseas visit to seek support for one of Canada's oldest allies as relationships with the United States have plummeted. During a joint press conference on Monday at the LC Paris in Paris, Carney said it was important for Canada to reinforce its ties and reliable allies like France. I want to ensure that France and the whole of Europe works enthusiastically with Canada, the most European of non-European countries, and at the same time resolutely North American determined, like you, to maintain the most positive relations possible with the United States of America. However, his visit comes amid growing tensions with Trump, who has imposed significant tariffs on Canadian goods. Canada has levied its own retaliatory tariffs. Trump has also repeatedly threatened to annex the country and turn it into the 51st US state, infuriating Canadians. Carney flatly stated upon taking on the premiership that this would never happen, as did his predecessor, the outgoing PM Justin Trudeau. So there's still a lot more happening on that front, but of focus today will be the inflation report. And as we have mentioned, a jump in inflation would most likely lead to a very strong Canadian dollar. On the other hand, a drop in inflation would lead to further weakness in the Canadian dollar. So on breaking news, especially on Al Jazeera, you can already see what's happening. Israel strikes Gaza, killing over 300, including many children, basically increasing the geopolitical risk yet again. And also, we have seen more happening with Russia, Ukraine. So the negotiations are still proceeding, but things are not looking good. So the geopolitical risk is still a significant issue, and we have seen investors rush back to the safe haven asset. So as of this moment, as we speak, gold has already hit a new all-time high of $3,022 per ounce. So outside of that, on the economic calendar, I don't think we have any other major news for the day. So the main focus will be on the Canadian CPI. So tomorrow, early in the morning, before we get to the next market snapshot, we'll be focusing on an interest rate decision by the Bank of Japan, where we don't expect a change in the interest rates. We expect a limit of 0.5%. But then there will be a monetary policy statement and, of course, a Bank of Japan press conference, both of which will shed more light on future oncoming monetary policy stance of the Bank of Japan. So as a result, we will be expecting strong volatility from JPY pairs as well as the Nikkei 225 index. And then later on, after we do the snapshot, we'll have the inflation report from the Eurozone, and of course, the main event of the week, which will be the FOMC interest rate decision, where the Fed will be making a rate decision and later presenting a press conference. So with that in mind, I believe it's time we jump into some technical analysis and try to understand what are the prevailing market patterns. So first things first, for gold, this is a new all-time high, so we don't have any candlesticks on the left. So what we are basically looking at is a momentum market where from the 1 minute chart, we are seeing a market that is just pushing higher and higher. So hopefully you are able to enter this market earlier on in the day. We started pretty well during the Asian session, a very strong rally. And then towards the end of the Tokyo session, we saw the market pulling back for a while to the high that we had seen yesterday. On Friday. So the high that we had seen on Friday was right here, 3,005. So after the market broke above that area, notice how there was a pullback earlier this morning, then a very strong pump. And now we are looking at gold trading at 3,024, pushing to 3,025. So there's a good likelihood that we at least get to 3,030, a round number, since we don't have any candlesticks on the left. So outside the current pump in gold, these are other markets that are making major moves. So on one side, we had yesterday and Friday a very strong rally happening on the Nasdaq. So Nasdaq had entered correction territory, and if you look at this chart, you'll notice that from the most recent high, right here, the Nasdaq had gone down by around 14.07%. So from the price action on Friday and yesterday on Monday, you can see it's two strong daily candlesticks, indicating that the market is coming back to senses and investors are buying right back. So from the 1 hour time frame, this is how it looks like. So yesterday we had a continued bullish momentum. So markets still forming higher highs, higher lows, and today, this morning, we have seen the Sydney session leading to some pullback, and now as we get into the London session, you can see evidence of buyers coming right back in and the potential of the market pushing even higher for the day. So we could be seeing the market retesting yesterday's high. So it's a similar story across all top US equity indices. So very strong performance yesterday and then Friday, and today we are seeing buyers coming in, potentially pushing prices higher. This is the Dow Jones Index. So perhaps a retest of yesterday's high, and similar thing with the SP 500, which seems to be already ahead of time, pushing for more upside momentum as investors buy the dip as the market gets out of correction territory. So in this case, we are potentially looking at the market retesting yesterday's high and potentially breaking higher for a third consecutive positive day. So BTC, made a strong dip this morning. So you can notice that since the market opened, there was a big sell-off, marking a key level support area that was below yesterday's New York session, but above the Asian session. At 82,232, we are seeing a positive correlation in the stock market. So Bitcoin is also making a very strong jump from the Asian session low. On the 1 hour time frame, we have a bullish engulfing, which basically implies that we could be seeing some far more upside on the London and New York session today. So as for the dollar index, we are seeing a big dump happening this morning. So clearly, with the dollar index selling this strongly, then we should be looking at the currencies that are stronger than the dollars of today. And one of them is the New Zealand USD, which when we were discussing this market yesterday, it was at this yellow area here. So it continued moving higher and higher for the better part of the day and then consolidated around midnight. So what we are looking at here is a market that once it got to this area, started trading sideways, and now it's on the verge of another break where it could break and form even higher candlesticks. So on the daily time frame, this is how it looks like. So it's that consecutive day where the market is pushing higher. So of course, the previous lows could serve as the next test. So the previous low on New Zealand USD was 0.58607. So from the 4 hour time frame, this is how it looks like. So there's still more room that the market pushes for 0.58607. So from the 1 hour time frame, we're just retesting the high that we saw in the morning, and we could be seeing a break in the market heading for higher prices. So outside of New Zealand USD, we also check its counterpart, the Australian dollar against the US dollar, and we're also seeing the same kind of pattern. Market pullback during the Asian session, and now as we enter the London session, we test yesterday's high, and potentially the market breaks and moves to the next available price action level. So good chance that we'll be seeing some more upside here. Perhaps the market going for this area here. That's around 0.644. So still more room for upside. So also we have to be aware of the 3 weeks high, the highest price we saw in the last 3 weeks. And this is around 0.64093. So there's still more room for upside. So we should be watching that if the market breaks here, then there's a potential it pushes even higher. So the pound USD is also making some strong momentum. So from the daily time frame, we are looking at a price action level that was last seen in November last year. So from the 1 hour time frame, you can already see that the sell-off we saw in the Asian session, we have already recovered and the market has broken above yesterday's high. And now we are 1 candlestick in. So clearly a market that is looking to push through the 1.3 round number price action level. So you can already see some activity here with the potential that the market cruises through that and moves even higher. So for Euro USD, it's the same thing, only that we had marked this consolidation here. So clearly this was the highest price in Euro USD and the market is breaking right through it, indicating that there is a very strong momentum and we could be seeing some more upside potential. So from the daily time frame, this is how it looks like. We don't even have a nearby resistance. So perhaps we'll be looking at this potential low around here, which is around 1.1. So given the current price action level, there's still more room for upside. So we could be seeing the market extending the rally to 1.1 price level. So for European equity indices, we saw the market making a strong rally yesterday. From the day time frame, if you look at the UK 100 index, then what we are seeing here is a market that has maintained positive momentum for the last 4 consecutive days, today marking the 5th. So we could be seeing the market completing the journey where the sell-off started, this big sell-off here. So 87.43 could be a potential target as the market looks to make a recovery and retest last week's high. So for the Nikkei 25 index, we are also seeing a similar thing, market making a very strong recovery. So from the daily time frame, we are looking at potentially this is a third consecutive day where the market is looking to push higher. And for the month, we know that the highest price we have seen on the month was from the very first day of trading this month. And there's a good chance that the market retests that area. So this was the highest price 2 weeks ago at 38,251 yen per share. So an expectation that the market eventually completes this move and gets to the previous high here. So for European equity indices, starting with the German stock market index, the DAX, we are seeing a very strong momentum as of this morning, and we are on the verge of breaking into a new all-time high. So the last all-time high was at 23,476 euros per share, and now the market has recovered completely, and it's about to retest that previous high. So for now, we expect the market to make the final push, get to the previous high, and potentially print a new all-time high. So we'll be watching that closely. So for the Spanish IBEX, we have had a breakout of this particular trend line. This is a trend line we have been mapping here to see if the market would find this trend line, get resistance, and continue with the bearish momentum. But now, since we have a break, then the overall expectation is now the market starts a journey that pushes through to the previous high around 13,439. So for the French stock market, we had the breakout earlier on. The breakout was way ahead of its time. It happened on on Friday. So Monday, we continued seeing bullish momentum. Of course, we expected the market to retest this area at 81.09. And now, as we get into Tuesday, the market is pushing above that price action area. And now our expectations are moving even higher. So in this case, a key focus on around 82.06 price action level as the market continues with the bullish momentum. And in this case, it's a path to recovery. So for the Euro 50, Euro Stocks Cash Index, yesterday we projected that the market was facing strong rejection areas here, and we expected the market to rally to this area, 54.91. So that goal was not hit as per yesterday, but this morning we are seeing the market complete the journey. So from that area on the 4-hour chart, now the next phase is the previous high. So in this case, with an expectation that the market eventually gets to this area, which is around 5,568 euros per share of the Euro Stocks Index. So on the Canadian dollar front, you can see that most Canadian CAD pairs are consolidating. So if you look at EuroCAD, we can say that for the last couple of days, this is more of a consolidation. So once we get the CPI data, then we should be able to have a key level breakout. So if you're a breakout trader, then this could be very interesting. If you look at EuroCAD, it's presenting one of those opportunities where the breakout could happen on either side, but then the breakout gives you a direction to trade. So in this case, for EuroCAD, a potential break would represent some really nice opportunities. We also have AudiCAD. So the Australian dollar trading against the Canadian dollar. The Australian dollar has been pretty strong since the week started. So if you look at the 4-hour chart, we are at a key level resistance, which means that we could get an outright break or a pullback. So also a very interesting chart to be observing. You look at New Zealand dollar trading against the Canadian dollar. New Zealand dollar has been a pretty strong pair. And if we go to the 4-hour, the daily time frame, then you notice that this was a pretty strong trend with the New Zealand dollar gaining against the Canadian dollar. And now from these areas here, we could be seeing an extension of the bullish momentum or a pullback depending on the outcome of the Canadian CPI news. So I'm trying to open USD CAD, which will be the main focus for the news in the afternoon. So for USD CAD, if you look at the daily time frame, this is what we have. A very strong market. We've had a very strong rally on the daily. So the Canadian dollar has been pretty weak since the year started. And this is mainly as a result of the tariffs, the ideas we've discussed with the Canadian oil markets, steel, and aluminium industries, and now the monetary policy, where the Bank of Canada has been cutting rates. And now, what we are looking at here is a Canadian dollar that has been strengthening over the past couple of days. And this was on Friday when the new Prime Minister was inaugurated. Then yesterday, showing that the market is responding positively to the new Prime Minister, Mark Carney. And now we are heading to another key level decision point that is literally based on the performance of the Canadian economy and the prices currently being experienced in the Canadian economy. So one key thing we can notice is that for the past couple of months, I would say 4 months, the Canadian dollar was pretty much losing to the US dollar. So since the high that we saw here, and this was on what date? The 3rd of February, we have seen the Canadian dollar regain some strength, lose, and then regain, and then lose and regain. So it's one chart that keeps on giving. So in this case, the most recent highs are around these levels here, and the most recent lows are around these levels here. So judging by the price action since the market opened this week, we are seeing the market headed lower, not higher. So we have not even attempted to get to last week's high. Instead, we have gone to last week's low, broken it, and moved lower. And as a result, now we are looking to potentially test the previous week's low, and that's around 1.4238. So with that in mind, if you go to a smaller time frame, in this case the 1 hour time frame, then the potential of the USD CAD retesting this area becomes significantly high, with a potential bounce from this price action area back upwards, but then also the potential of the market breaking below that and moving to a new low, in this case an area where the Canadian dollar continues to strengthen against the US dollar. So what we are trying to establish here is the pivot point, or a key level decision point for Canadian dollar traders, where from the current price action, we expect further downside momentum to 1.4238, and then perhaps a bounce from that area or even a break. But then 1.4238 remains the point of focus, as this is the lowest price we have seen in 2 weeks, and the market is currently pushing towards that area. So I'll be checking on the comment section to see if there's any questions. So a good question, check out the US 30 daily time frame. I already did. I believe we already did this for the American indices. So for the US 30, 2 consecutive days of bullish momentum. So the market has showed a very strong bounce. So from most recent highs, we are looking at a 9.79% correction. So closer to 10%, and now we are seeing buyers coming in back strongly, indicating that the markets are due for some good recovery after the big sell-off we have seen in recent weeks. So good morning, Charles Palmer. We have already analyzed BTC USD. So could you kindly address the time factor in migration of EST to DST? So it happens several times a year. This is when the Americans and the Europeans are trying to optimize daylight. So when that happens, the stock market opening and closing times change by an hour. So we know that a month ago, or more than 2 weeks ago, we were seeing the US stock market opening at 5:30 p.m. So after changing the daylight saving time, now the stock market is opening at 4:30 p.m. So majority of market news that we were getting at 4:30 p.m., now they are coming up at 3:30 p.m. So that's usually the big change that we as traders have to adjust to. The rest remains as normal market hours. Why is the yen so weak and we expect the Bank of Japan to hold rates tomorrow? Holding rates is not what the market has been looking forward to. The market has been looking forward to the Bank of Japan jacking up rates like hell. So far it hasn't happened. So what might drive the sentiment in JPY pairs is what happens at the press conference. So if they promise or hint at another rate hike in May, then that would further strengthen the Japanese yen. So as per oil, I don't know if we have covered oil today. So this is a good question. So from what we are seeing here with Brent, I believe this will be the same story with WTI. We have had this consolidation for quite a while, and now, as of this morning, we are looking at a break, basically implying that oil prices are moving higher for the day. So I don't know for how long we are going to see this bullish momentum, but I know that long term we are still bearish on oil. But for now that we have a breakout, good likelihood that the market prices continue moving higher. So you've covered USD JPY. So could the rebound in USD indices be indicative of USD regaining its strength, or could it be pricing in tomorrow's FOMC developments? For me, it's more likely a technical issue where whenever a stock market goes into correction territory, some stocks become really cheap. For instance, a big company like Tesla was down by about 50%, and that gives investors a very cheap discount. If they have been looking to enter that market, then they're able to buy it at a much cheaper price. So in this case, I see it as a technical value play from a lot of investors who have been looking to buy some of these stocks at cheaper valuations. So to me, personally, I think it's that technical aspect that is driving the strong bounce. Then from the FOMC, we'll see whether there will be more positive news. But overall, there has been a lot of commentary, especially from investment bankers, that the Fed may be stuck with high interest rates for a longer period of time, mainly because Trump's actions and the overall economy is expected to maintain a moderately high inflation level around 3% or even higher. So how is the current tariff wars between Canada and US affecting the CAD pairs? I think we have discussed this widely as part of the full video today. And the overall sentiment is that the Canadian dollar has been on the losing side of the tariffs war. But then, since the new Prime Minister was inaugurated on Friday last week, we have seen the market responding positively. The fact that the new Prime Minister has shown more diplomacy or a more diplomatic approach to tariffs, now we are seeing the market gaining confidence. And over the last 3 days, Friday, Monday, and now today, we are seeing the Canadian dollar finding its strength again as similar to what we saw with Trump. When Trump was inaugurated as the US president, we saw the dollar strengthening. So now the market is responding positively to Mark Carney as the new Canadian Prime Minister. So that's all for today. Remember to open a trading account using the links in the description below if you don't already have one. For those who haven't checked out the latest episode of the Bullish Banter podcast, here we covered mastering gold trading with ICT concepts and smart risk management with one of our guests, 2G Forex, Oscar 2G. So make sure to check it out. It's available on FXPesa YouTube as well as other podcast platforms. And if you are just beginning a trading journey, make sure to check out the Novice to Pro series, which is a fully free educational course available on FXPesa YouTube. So that's it. Thank you all. Also, remember we have a Love and Money event, fully sponsored by FXPesa. Sorry, not fully sponsored by FXPesa. So the event is posted on all our social media handles. It's a premium event where we get to discuss love as well as money and how the two collide. And it's a premium event, so you might have to pay for it. So make sure to check it out on all FXPesa socials. And if it's something that might interest you, then we'll be having a good event. So that's it for the day. Enjoy the rest of your day, and I hope you have a happy trading week.